Welcome to our market view presentation. Today we are going to familiarize you with economic data of the currency pairs AUD Euro and USD Euro. Afterwards we are going to make a conclusion about the impact of today's economic data in the future. I, Julia Golombek, and my colleagues Carlo Baum and Louis Kennedy, who are all distinguished PhD academics and managing directors at Deutsche Bank, represent to you today. For both currency pairs we will first analyze the following factors: history, relative inflation rate, relative interest rate, commodity prices and economic growth, and provide a forecast for the future outcome. First of all, we will start with AUD and Euro. After the introduction of the Euro in 1999, the Euro depreciated against the AUD for a period of 2 years until it started to appreciate continuously from 2001 until 2009. After the financial crisis in 2009, the Euro depreciated against the AUD. Euro AUD is fluctuating between 1.38 and 1.61 continuously since 2015. Here we will discuss the inflation rate in Australia and the Eurozone. Looking at the inflation rates of Australia for Q2 in 2016, there was an inflation rate of 1.0%. In the Eurozone we had an inflation rate of minus 0.07%. This observation leads to the conclusion that the inflation rate in Australia has been higher than in Europe in Q2. Therefore, we expect less demand for the exports in Australia and less demand for AUD in the short term. Australian prices will become less competitive in the world markets, causing demand curve to shift to the left. However, we can expect more demand for imports in Australia and therefore more supply for the AUD. Overseas goods will become relatively cheaper on the Australian domestic market and the supply curve will shift to the right. The Australian prices will be reduced relatively to the Euro. As a conclusion, the AUD will depreciate against the Euro. The next part consists of the relative interest rates between Australia and Euro. According to the RBA, the nominal interest rate of AUD is 1.83% in Q2 in 2016. Therefore, we calculate a real interest rate of 0.83% in AUD. The Euro achieved a real interest rate of 0.07% in Q2 in 2016. As we can see, there is a higher real interest rate in AUD against the Euro. Therefore, the capital inflow in Australia is encouraged and there is an increasing demand for the AUD. Therefore, the demand curve will shift to the right. On the other hand, a capital outflow will be discouraged. Therefore, we have a decreasing supply of the AUD and the supply curve will shift to the left. Overall, we can assert that there is an appreciation in AUD against the Euro.
Hi, I am Carlo Baum and I will be continuing where Julia left off. Australia mainly exports agricultural products and minerals such as coal and ore. Analysts say iron ore appears to be a market where no investment in new capacity is needed for at least a decade, because of the decreasing demand from China and the new economic thinking or the scrap age. The US Energy Information Administration expects coal prices to decrease as natural gas becomes the standard for electricity generation. Given these outlooks, it can be said that Australia's exchange rate will decrease. Coal and ore make up almost 50% of the total exports value and both commodity prices are expected to fall. Less Australian dollars are demanded in the world market, causing a depreciation of the Australian dollar against the euro. Another factor that has an important impact on the exchange rate is the global impact of fluctuating commodity prices. This means that importers of certain commodities cannot turn to another country once a commodity price has increased. They are most likely to continue importing from the same country at a higher cost. From the exporter's point of view, the value of exports increase and hence the demand for the domestic currency and hence the value of the domestic currency increases. Economic performance of the European Union expanded during 2016, with a GDP of 14.63 trillion and real GDP growing 2%. Growth looks to be weaker and more uncertain following the sharp falls in European equity markets, particularly of banking shares which undermines consumer and business confidence. Economic growth in Europe is expected to remain modest as key trading partners' performance has slowed and some of the so far supportive factors start to wane. As a result, GDP in the euro area is forecast to continue growing at modest rates over the 2016-2017 period. Australia recorded its 20th consecutive quarter of growth in the first 3 months of 2016, according to data released by the Australian Bureau of Statistics. Real gross domestic product GDP grew by 1.1% in quarter 1 in seasonally adjusted chain volume terms, seeing the year-on-year growth rate accelerate to 3.1%, the fastest pace seen since the September quarter 2012. It has now been 99 quarters since the Australian economy has experienced a technical recession. Output growth will gradually strengthen towards 3% in 2017. With high interest rates relative to Europe, the Australian dollar is an attractive investment for foreign investors who are seeking high returns as well as greater demand for Australian exported goods that are bought cheaply. With European interest rates set at minus 0.4%, the AUD is likely to appreciate against the euro continuously into 2017 as more trade and investment takes place throughout 2016 until 2017. Given the analysis of the determinants, we believe that the AUD will appreciate against the euro. The next currency pair we are going to analyze is USD-Euro. After the introduction of the euro in 1999, the euro depreciated against the USD for a period of 2 years, until it started to appreciate continuously from 2001 until 2009. After the financial crisis in 2009, the euro depreciated against the USD. Euro-USD is fluctuating between 1.05 USD and 1.15 USD from 2015 on, making it more stable than Euro-AUD, which is being more volatile between 1.38 AUD and 1.61 AUD as previously shown.
Hi, I am Lewis Kennedy and I will be finishing the presentation. The following part is about the relative inflation rates of the USD and the Euro. According to the RBA, in quarter 2 in 2016, the inflation rate of the Eurozone was negative 0.07%. For the US, we had an inflation rate of 1.03%. As you can see from this graph, this leads to a lot higher inflation rate in the US. In effect, we expect less demand for exports in the US and therefore less demand for the USD. The US prices will become less competitive on the world market. For this reason, the demand curve will shift to the left. However, there is a more demand for imports in the US and therefore more supply of USD. Overseas goods will become relatively cheaper on the US domestic market. Due to this, supply curve will shift to the right. The US dollar will depreciate against the euro. The next slides are the relative interest rates of USD and euro. To find the real interest rates, the inflation rate must be subtracted from the nominal interest rate. Therefore, we achieve a real interest rate of negative 0.65% in the USD and a real interest rate of 0.07% in the euro in quarter 2 in 2016. Therefore, the euro has a higher real interest rate against the USD. On the one hand, the capital inflow in the US is discouraged, and we have a decreasing demand for USD. The demand curve will shift to the left. On the other hand, capital outflow is encouraged, and we have an increasing supply of the USD. As a result, the supply curve will shift to the right. All in all, the exchange rate of the USD will depreciate against the euro. Apart from machinery, the USA exports mainly oil and wheat. The International Monetary Fund published a market price outlook for selected commodities. All the outlooks suggest an increase in the value of the commodities that are being exported from the USA. An increase in exports from the USA will lead to an increase in demand for the USD and therefore an appreciation against the euro. This can be seen in the following graph. Real GDP grew only 1.1% in the first quarter of 16.77 trillion and GDP growth forecast to reach 2.2% in 2016, reflecting a pickup in consumer spending and exports, and a small decrease in fixed investment and federal government spending. Spending on durable goods, vehicles and parts, and non-durable goods, pharmaceuticals and tobacco, increased overall. Compared to the previous year, economic growth has contracted. Gross domestic product will remain at 2%, with manufacturing forecast to increase faster than the general economy. Production is expected to grow 2.6% in 2016 and 3% in 2017. Demand for imports is likely to increase in 2017, causing a greater supply of USD and the supply curve shifting to the right, and a depreciation against the euro. Borrowing from overseas is likely to inflate the supply for the USD, and with low domestic interest, demand for goods will cause increased capital expansion in the US manufacturing sector to meet domestic demand, which is a classic situation of crowding in. However, with the Federal Reserve likely to raise interest rates to 1.6% in 2017 in order to contract economic activity, this will likely cause an opposite impact on the exchange rate for the future period, with demand increasing for the USD and causing the exchange rate to appreciate against the euro. Given the analysis of these determinants, we believe that the USD will depreciate against the euro in the future.